We're back with Ian Bailey of SmartPay, who's been through New Zealand in the last week talking to brokers and shareholders about his business. And one of the topics that has come up is that the company is looking to list on the ASX at some stage. To understand that a little bit better, Ian's with me now. And Ian, I'd just like to ask, what's the rationale for going to Australia?
Well, we're already in the Australian market. That's the fundamentals. We have a significant business in the Australian market now. We have a number of niche market segments where we've been very, very successful. We've got forward orders coming out of the Australian market at a substantial rate, and we have a huge amount of business that we have to implement over the next 12 months. So it's fairly obvious for us that the growth market is actually going to be in the Australian market. As such, Australian entities like to see an Australian presence, and that's much more than a few people in an office. They want to see a substantial presence where they can find commitment from the company into that region. So that's one reason. The second one is a large number of our corporate customers are Australian based, and as part of the relationship with them, we're saying how can we expand that into the Australian market. Thirdly is the way to grow the Australian market and to grow the business overall is via acquisition of customer bases. And we've just seen that happen, and the result of that's coming out this year. So to grow that even faster, we would like to acquire some customer bases, and to do that, once again, you need an Australian entity. So the last one, of course, is ability to access working capital and capital to grow the business. It's much more available in Australia.
And do you think there'd be more energy in Australia in terms of interest in small cap stocks? I mean, are the Australians more likely to take to a story and support it than the New Zealand investor?
Well, our experience to date and the limited amount of work we've done to date would indicate that's correct. One of our independent directors is actually an resident Australian-based director, and he's been doing a significant amount of work in that market to identify how we should approach the ASX in the Australian market. And all indications are that the business model we run, the methodology that we undertake our business and roll out, has huge amounts of interest in the Australian market right now.
Now, where do you think the company might be by about this time next year?
We haven't actually given any more forecasts out past March of 2011, but it'll be significant growth, we believe, particularly in the Australian marketplace. The New Zealand market's going through a rollout of about another 50,000 terminals by June of 2011. And Australia has to replace about 600,000 terminals or upgrade them in the next 5 years. So once again, we see that there's a significant business coming out of Australia, and that will certainly have a positive impact, but at this point we haven't made any forecasts.
And the current number of customers in New Zealand and the size of the market where you might get to in New Zealand relative to where you are in Australia?
Oh, look, in New Zealand we have about 30,000 customers on our customer base. That represents probably about 30% of the New Zealand market. To move the New Zealand market to 40 or 50% is something we'll just keep on focusing on and chipping away at. And that'll take some time. In the Australian market we only have about 2%. There is some market changing events over there which are opening up a huge opportunity for us. So if we got up to 6, 8 or 10% of that market of 600,000 terminals, you'd have a very, very strong business out of Australia as well.
Thanks very much, Ian.
No problem.